moment of the week, we're looking at British politics, and the custodian of the world's sixth largest economy reduced to tears on the benches of the House of Commons. Now, speaking at an event on Thursday, the UK Chancellor, Rachel Reeves, said it was because of a personal, private matter.
Clearly, I was upset yesterday, and everyone could see that. It was a personal issue, and I'm not going to go into the details of that. But my job as Chancellor at 12 o'clock on a Wednesday is to be at PMQs next to the Prime Minister, supporting the government, and that's what I try to do. I guess the thing that maybe is a bit different between my job and many of your viewers is that when I'm having a tough day, it's on the telly, and most people don't have to deal with that.
Now, her comments came after an outsized market reaction saw the 10-year gilt yield spike by more than 20 points, as Keir Starmer, the Prime Minister, equivocated on whether Reeves would keep her job. At one point, set to record the sharpest sell-off since October 2022 and the days of Liz Truss. Now, sterling also came under pressure after a vote on a bill that was meant to save the government £5 billion, ended up saving it nothing at all, or according to one estimate, costing it £200 million. Now, Reeves has come under intense criticism since the Labour government came to power, from all sides of the political spectrum, really. But this week may have given her the most security in months. It all depends, really, on whether Wednesday's market upset was down to investors' fear of her departure or simply concern over the state of public finances. So let's get a check on gilt so we understand where we are as we approach the end of the week. It's worth keeping in mind that if you look at the benchmark, the yield on the 10-year gilt actually reached 4.61% at one point as a result of that political turmoil or upset. At this stage, though, we have seen the yields coming off after that event. And indeed, on Thursday, we did close seeing the yield on the 10-year gilt at 4.54%. In terms of sterling, let me show you where we are as well, so you get a sense of what happened in that part of the market too. Again, we saw pressure for sterling against the euro as well as the greenback. Those concerns have eased a little bit as we witnessed Thursday's trading day. But ultimately, the question here is where do we go from here? Because clearly the investment community is showing a lot of concerns about the fiscal position of this economy.